Hello and a very warm welcome. I'm Ruchi Sharma. We have got you all the latest news and updates from the blockchain technology world. But first, let's take a look at the headlines. Crypto trading volume on Indian bourses shrink after new tax rules. US SEC says listed companies must account for crypto-related risks. Cryptocurrencies trade mixed. Bitcoin fluctuates near $46,000. DeFi lender Inverse Finance exploited for $15.6 million. 86 billion SHIB purchased by third largest whale on Ethereum. Global investors boost investments in Indian Web3 startups. Binance partially resumes deposits withdrawal on Ronin network. Cryptocurrency trading volumes on Indian exchanges dropped after new laws to tax the digital asset kicked in from April 1. Trading volume on 4 leading exchanges witnessed a steep fall as investors sought to overcome the high incidence of tax on income generated from trading in cryptocurrencies. Trading volume on CoinDCX dropped to around $12 million on April 2 from over $36 million seen on Friday. Similarly, trading volume on WazirX slipped to less than $100 million or halved on April 2 from a high of $208 million on Friday. Aditya Singh, co-founder of Crypto India, in his tweet on the weekend uploaded trading volume graphs of 4 leading exchanges showing the slump. Starting April 1, Indian residents have to pay a 30% flat tax on crypto income or digital asset investments, the highest tax rate applicable for speculative activities such as gambling, horse betting and income from lottery. The tax on income will be applicable without the facility to offset losses in one trade against gains in other, as in available for other asset class such as stocks or commodities. Along with the capital gains charge, the Finance Ministry has also announced a 1% tax deductible at source or TDS on all digital asset transfers above a certain size starting July 1. Crypto exchanges and tax analysts warn that the TDS will suck liquidity out of the market by forcing high-frequency traders to dramatically curtail their trading. Under the new regime, the buyers of a crypto asset must deduct the 1% TDS on behalf of the seller if a transaction exceeds 10,000 rupees. Smaller trades would also be taxed if they top a cumulative rupees 50,000 in a financial year. US-listed companies holding cryptocurrencies on behalf of users and customers should account for those assets as a liability on their balance sheet and disclose the related risks to investors, the US Security and Exchange Commission has said. The securities regulators' guidance will apply to listed entities, including crypto exchanges and traditional firms such as retail brokers and banks that are providing cryptocurrency services and holding digital assets on behalf of a range of clients. Currently, there aren't any standards for safeguarding crypto assets and companies differ in their treatment of these arrangements, pointing to the fact that there are significant technological, legal and regulatory risks associated with safeguarding crypto assets. The SEC, in its guidance, the companies should be reflected as a liability on companies' balance sheets. Companies should also disclose the nature and amount of crypto assets they are responsible for holding, with separate disclosures for each significant crypto asset and any vulnerabilities resulting from concentration in such activities. Cryptocurrencies traded mixed, with Bitcoin trading near $46,000 after climbing past $47,000 on Sunday. Macroeconomic and political uncertainty continued to weigh on investors' sentiment. Crypto's late weekend surge was out of sync with the major equity markets' performance on Friday. The tech-heavy Nasdaq and the S&P 500 fell slightly as investors seemed to be preparing for the US Federal Reserve and other central banks worldwide to continue more hawkish monetary policies. Trading was off from higher level earlier in the week, as is often the case on weekends. Uncertainty over the pace of central banks' hikes also induced volatility in the market. Bitcoin started the weekend quietly, but by late Sunday, the largest cryptocurrency by market capitalization has soared past $47,300. BTC was recently traded near $46,000 in Asian trades, the same level it was seen earlier Saturday. Ether, the second largest cryptocurrency by market capitalization, followed a similar pattern and was trading around $3,400, though up nearly 2% in the past 24 hours. Meme coin Doge was trading over 5% higher. Doge alternative SHIB was up over 3%. Solana and Cardano were up 2% each, while Terra Luna token traded flat at $113. Ethereum-based lending protocol Inverse Finance said that it suffered from an exploit with an attacker netting $15.6 million worth of stolen cryptocurrency. According to Inverse, the attacker targeted its anchor money market, artificially manipulating token prices to borrow loans against extremely low collateral. According to blockchain security firm PeckShield, the attacker tricked the oracle into thinking that the price of Inverse INV token was extraordinarily high and then took out multi-million-dollar loans on Anchor using the inflated INV as collateral. Inverse said in its announcement that it had temporarily paused all borrowing on Anchor and it is working with Chainlink to build a new INV oracle. Inverse also announced that it plans to make a proposal to its decentralized autonomous organization to ensure all wallets impacted by the price manipulation are repaid 100%, though without providing further details. The third largest whale on Ethereum blockchain, marked as Suna Day, purchased 86 billion Shiba Inu tokens despite the anemic price performance of the meme token. The transaction is valued at $2.3 million. According to Whale Stats wallet page, the biggest holding on the wallet is American-born Doge token. The address currently holds $1.8 billion worth of US Doge. Second place on the wallet is a PAXG token, which allows exposing investors to gold via digital assets. The whale currently holds 2 trillion SHIB worth approximately $47 million. The well-knit Indian Web3 community seemed to have caught the attention of global investors who have committed to invest millions of dollars in Indian Web3 startups. Last week, venture arm of Coinbase, a US crypto exchange, Coinbase Venture, along with Builders Tribe, announced a startup pitch session for Indian Web3 companies and has allocated a prize pool of up to $1 million for winners. This was closely followed by UAE-based VC firm Cypher Capital allocating 40% of its $100 million blockchain fund to invest in Indian crypto and blockchain startups. Similarly, US-based investment firm General Catalyst said it is bullish on India and noted Web3 as one of its focus investment areas. Sequoia-backed Polygon is one of the prominent examples of Indian Web3 companies building for the world. The company raised $450 million from Sequoia Capital along with the participation of over 40 marquee venture capital firms. Overall, global investors believe that numerous successful Web3 companies will build from India for the world. Global cryptocurrency exchange Binance over the weekend resumed deposits and withdrawals on Axie Infinity's Ronin network, which has been suspended since Tuesday following the hack. Binance had suspended all deposits and withdrawals on the Ronin network and blocked potential hacker addresses, with the team watching for any unusual transactions. In addition, Binance paused withdrawals of wrapped Ether on the Ethereum network and the convert function from WETH to ETH. Over the weekend, the exchange said deposits and withdrawals for Axie Infinity and Smooth Love Potion on the Ronin network had been resumed. However, withdrawals of wrapped Ether on the Ethereum network and the convert function from WETH to ETH remain closed until the exchange deems it to be stable. That's all in the bulletin for now. Do like, share and subscribe to Crypto TV. This is Ruchi Sharma signing off. Have a great day.